Hey bros, what's going on? Good morning. I hope you guys are having just an awesome Friday and are ready to get to work. Wanted to talk to you a little bit about a trade that we took yesterday in Nerve, and I made a couple mistakes on this. And this is one of the key things of really trading is waiting for your patterns. Otherwise, I would have had just this monstrous day instead of an okay day. But one of the things that we look for when we're trading stocks is story stocks, story stocks that have some type of good PR, a good volume, chart breakout, and a whole host of different other factors that we look into. And that's kind of what makes momentum stocks. Not all stocks are created equal. You can trade the same setup in 5 different stocks and you'll get 5 different results. When you're trading things like certain patterns, they have to marry the type of stock that you're trading. Otherwise, that stock won't move that way because it doesn't have the certain characteristics that you need for something that's explosive. And so we had a really good trade on Nerve at the end of the day, but I made a couple mistakes in the beginning of the day, and that's really that's really something to be mindful of is that, I had a feeling when this stock had its news out and the way it was acting that it was going to explode at some time during the day. But where I made a mistake on this thing was that put me in the hole almost $5,000 on. I ended up making about three, but I was in the hole like five because, when this stock opened up, I chased this thing that first candle. And when you chase a stock the first candle, you have no way to manage your risk. You have no way to judge your levels. You have no action yet to base a trade off of. You're just taking a guess. And because I've been trading maybe so long, when you have that inkling or that intuition, and so you just dive into it, right? You just dive into it, and that's not how you trade. You need patterns. In trading, it's important to be able to see levels, clearly defined lines in the sand where you can see supports, resistances, so that you can manage your risk. But most importantly, those levels, when they start to coil and consolidate, they start to make the stock explosive. It's like a pressure cooker where a stock is getting tighter and tighter and explodes. And so where I made my mistake on this stock was, trying to hit this thing at the open, and I don't have that kind of coil or pattern yet. And so I ended up in the hole a good chunk of cash because I actually tried it a couple times because I don't know what happened to me. Maybe I didn't have my coffee or I had too much coffee, and I was in the hole a lot. And I know that I have to wait for that pattern. And so, later on, you can see what happens is, when the stock starts to dip and you start to hold this $9 level, notice like throughout here, right, your range is really, really getting contracted. And you can see like you've got that $9 level holding and your range is just getting tighter and tighter and tighter and tighter and tighter. And that's the huge part about trading is when you know there's something that you want is actually waiting for the setup, waiting for that inflection point where it can actually explode, right? If it ain't tight, it ain't right. And so you can see later on the day, and this usually will happen in the afternoon, as the stock starts to coil up, and then when it finally breaks, now you've got your huge push, into the close all the way from $9 to 13. I mean, that's a huge move. That's a lot more range than anything I could have got in the beginning. And so a lesson learned, even though I know the lesson, no matter how long you've been trading, sometimes you'll have those slips. And the key is to just not keep doing them. Make a mistake once and then shelve it for a little bit of time. And this is, a pattern, this end of day pattern is what we call a day-long consolidation. That's something that we teach in our boot camp and, we always talk about in our chat room. But, I learned a hard lesson today because I would have had this monstrous day. Maybe I would have been up $9,000, $10,000. Instead, I ended up in the hole so much of the day because I chased that first candle. So remember, guys, the lesson for this is don't buy the first candle. Don't buy when you don't have clearly defined levels or clearly defined ways to get out of a trade. Anytime you buy too quick, you're putting yourself at risk because, what if this thing started to drop? Like, yeah, I got out like $9, but what if this thing started to drop to 7, 8, and I couldn't get out because this is dropping so fast? How much money would I have been down? I would have been down so much money that really I would have been grinding the rest of the summer, right? Just to kind of get it back. And that's where we don't want to get to is, right? It's okay to have small losses, but it's not okay to have small losses that have no plan. It's not okay to have losses where you break all your rules. And so do it once, maybe do it twice, but that's it, right? Wait for those patterns to emerge, and your trading is going to get a lot more smooth, and your results are going to be a lot more predictable. Guys, feel free to email me, canal@bullsonwallstreet, or leave any comments on the YouTube. I would love to hear from you guys. Take care.